So you've decided to buy a house this year, or at the very least, you're interested in what the process may look like. I'm going to break down my top tips that I would personally give any of my clients when it comes to buying a home. And trust me, the strategy is a lot different than it has been the last few years. So you're going to want to stay till the end to see all of the strategies that I recommend. But first, my name is Tiffany. I'm a loan officer here in Las Vegas, Nevada. The Las Vegas market is my specialty, so if you're looking to move to Vegas or if you're currently here and you're looking to buy or refinance a home, I would love to be able to assist you. I'm going to leave all of my contact information in the description box below, so if you are interested in working with me, feel free to reach out. But now onto the video. The number one tip that I would give to someone who is looking to buy a home this year is do your research when it comes to lenders. Now, I know a lot of people, they say shop your lender, and when a lot of people say that, I think they have the impression that you're supposed to be shopping the lowest interest rate, or that ends up being the conversation that they end up having with different loan officers instead of asking more productive questions. The reason why I don't think interest rate is the best way to go when it comes to shopping lenders is because, if I'm being honest, there are some bad players in the mortgage industry at the moment that may tell you the lowest rate that you've heard out of 5 different loan officers. But what they're failing to acknowledge is that they're probably going to charge you points for that interest rate, or that interest rate is only available if you do this certain type of program. What they're not saying is that their fees are maybe astronomical, or maybe they're, again, not exactly being truthful about what it's going to cost you to get the interest rate that they're quoting you. So my personal recommendation is do not bring up interest rate if you're on the phone with someone. Now, it is something you're going to want to shop for once you are, closer to picking which lender you're going to go with. But I would personally recommend working with someone that you know, that you trust, and if their interest rate's slightly higher, then I think it makes more sense to pick someone that you know is going to be able to close your loan, that does their due diligence, and maybe more pleasurable to work with. So those things I would all say are way more important than what is the interest rate. But you cannot deny that an interest rate is important. So what is the best thing you can do as a consumer to try and find the best possible option for you? Well, my biggest tip is stop looking at what the average interest rate is. I think a lot of times people see what the average interest rate is, or maybe an influencer posts what the average interest rate is, and then they're a little bit surprised when they go to talk to a lender and their interest rate is not that rate. So that rate that people are quoting you, or that are being shown on influencers, or let's just say you have a realtor who's posting what interest rates are, they're posting it based off who is the best credit tier and is probably including some kind of points. So I know I've seen a few realtors from the ones that I follow that post interest rate updates weekly, but they're rates that I don't think are realistic with where the market is currently at. So do your research about lenders. I would personally recommend, if you're going to shop lenders, read their reviews, look at their online presence. I think the biggest thing about looking at lenders is who has a good reputation, who works well with others, who is available on nights and weekends, and who is going to get the job done. These are all things that if you look at reviews, at least of the company, maybe not the specific loan officer you're working with, although most of them do have reviews, but the company itself, you should be able to look up their Better Business reviews. You should be able to look up any consumer complaints. You should be able to look up their presence online, like if they have people that follow them, maybe just getting a good idea as far as what their presence actually looks like and what are people saying about their experience when they're working with them. I think that's way huge, and it's something that I don't see enough people talking about, truthfully. Let's just say you found a few loan officers that you want to call and interview and see if you want to work with them. What is the best question that you can ask when it comes to making sure that you're getting the best deal possible? What I would recommend is asking them, what do their fees look like and what have you seen on average when it comes to closing costs? The reason these two are different is because closing costs can include things that the lender has no control over. So this includes your title premium. This includes homeowners insurance. This includes property taxes. This can include, so many other things that may be out of the mortgage lender's control. You're going to want to have a good idea about what you're going to be paying at the end, or what is an average that the loan officer has seen when it comes to closing costs. But more importantly, you want to ask them, what are their fees and what fees do they charge? From my experience, I see companies offer about 3 different types of fees, unless you're also including discount points. So you have what's called an underwriting fee. So this is the fee that they charge you to basically pay their underwriters. Then you have a processing fee. I've seen some lenders charge this and I've seen some not charge this. But again, this is usually the fund that they pay the processing team with. And then you have an origination charge. Origination and processing, I usually see like alternated. So if someone doesn't charge a processing fee, then I see an origination charge, or vice versa. And with the origination charge, that is basically how they pay the loan officer who is doing your loan. So when it comes to those fees though, you want to make sure that you have a good idea as far as what you should anticipate. Now, I've personally seen a few different options when it comes to like the origination one in particular. I've seen it either as a percentage of the loan. I've seen it as a flat amount. I've seen some people who don't even charge an origination fee. So that is something that when you're shopping lenders, you may want to ask and see what you can anticipate when it comes to those fees, because those are the ones that the lender is actually charging you to do the loan. When it comes to closing costs, a lot of that's going to other people. That's going to other companies, third party, that are all working to make this transaction happen for you. But when it comes to the actual fees, those are charged by the lender for doing the loan. The biggest reason why I like asking about fees as opposed to interest rate is because it creates a lot less room for someone to try and take advantage of you. So if you call someone and let's just say they are maybe not the best person when it comes to quoting rates, and they're going to quote you the absolute lowest rate that they can. And what they're trying to do is probably make you pay points for that rate, but they're not going to tell you that until you actually do the loan with them, and then you're surprised at the end with the closing costs. So let's just say you call up ABC lender and they tell you, hey, I can get you a 5% interest rate. Well, if you don't know what they charge in fees, then when you get your loan estimate and you see the discount points, you may think, oh, maybe that's the charge that they are requiring to do the loan. Versus if you would have asked about fees in the first place and they said, hey, my fee is $1,500 for this and another $500 for this. Well, then you know you can anticipate $2,000 in fees. So you cannot be surprised when you get your loan estimate and let's just say there's a totally different figure for fees. Then at that point, you know whether or not you're being taken advantage of or not. So again, fees are the best way to shop lenders. If you're going to go the old school route and just call every lender until you find the best deal, you need to make sure you're asking about what fees they charge and not the interest rate that they charge, because anyone can quote you any interest rate. But if you're not asking about how much it's going to cost you to do the loan, then someone may potentially be taking advantage of you without you even realizing it. Tip number 2, when it comes to this market in particular, you need a realtor who is very comfortable with negotiating. And I know that that seems kind of like, duh, they're a realtor, they're going to be comfortable negotiating. You have to remember there's a big majority of realtors that just got licensed within the last couple of years, which means that they walked into this industry and their experience is doing whatever the seller wants to buy a property. So maybe their negotiating skills aren't as well equipped as someone who has been in it a little bit longer. Now, I don't usually like to make the point of experience versus not experience, because I do think that there's people who maybe don't have as many deals under their belt that are great negotiators. And then you also have some people who have the experience that only do one deal a year and they don't really have the experience that you would need to be successful. But I think you need to find a realtor who is very comfortable with negotiating. I think the biggest way you can tell is to talk to them and ask them about their previous deals. Any realtor who's gotten their buyer a really good offer when it comes to like concessions or buy downs or anything like that, they're gonna be proud to tell you that. They're gonna be like, I saved my client $20,000, or I just saved this person X, Y, and Z. I bought down this person's interest rate to whatever. They're going to be very proud to tell you about the successes with other buyers. But if you have someone and you're talking to them and they're not really talking about their previous deals and it's kind of more, yeah, I did this house, maybe it was 3 years ago. I just got this property and they bought it for this, X, Y, and Z. then you need to assess in that moment if they are going to be the best negotiator for you. Like I said, someone who is a shark when it comes to negotiating is going to be proud to tell you that they're a shark, and they're going to be proud to tell you about how much they can save their clients. Because again, they're trying to win you over. The market is pretty dull right now when it comes to buyers. So someone who really wants your business is going to go above and beyond and reassure you that they're the right choice. So pick a realtor who's comfortable with negotiating and is comfortable with how different loan programs may work. Now, this isn't necessarily their specialty, so I don't expect them to be experts on the subject, but they do need to know the essence of, say, a buy down program or the essence of, let's just say, FHA loan. Because again, these were things that we weren't seeing too often the past couple of years. So if you have a realtor who's not too well versed in these things, they may not even know how to help you, even though they want to. So pick someone who's comfortable with negotiating and someone who knows the current loan programs and how they work and how they need to be an advocate for you in order to make your deal work. Tip number 3. Research different programs in your area to see if there is a program or a product that makes the most sense for what your needs currently are. Now, I would love to say every lender can do every loan, but that's just not the case. Different lenders typically specialize in different programs. So if you go to a bank, they're probably going to specialize in the average person who has 3.5% to 10% down to put on a home. So maybe their expertise isn't down payment assistance. And even though you love working with that bank, they're not going to be the best fit for what your need is. Versus let's just say you wanted to go to a broker, but you want to buy a jumbo loan. Well, typically jumbo loans when it comes to working with a broker are not going to be the best deals typically. And I say that as a mortgage broker. There's definitely ways we can make it more affordable, but you're always going to get the best deal with some kind of relationship type banking opportunity. So if you are part of a credit union or you're part of a bank that gives you discounts for certain loan amounts, then that is going to be a better deal for you. So it's all about doing research about what your needs actually are and who can actually help you accomplish them. I think the biggest thing that you can do is do your research as far as what your needs may be, but even before that, assess what your needs may be. Maybe you don't need down payment assistance and you just like the idea of getting assistance, but you don't realize that it often comes at a higher interest rate and less favorable terms. Well, then you can decide, hey, maybe I don't need down payment assistance. Or let's just say, you're only going to be in the property for a year and you need to be able to rent it out after that year. Find a lender that is good long-term for investments, because ultimately you're probably going to want to be working with this person for a while, especially if you enjoy the home buying experience with them in the first place. You're probably going to want to keep working with them. So find someone who specializes in what your needs may be. And that brings me to another point. Research different loan programs because they may end up helping you accomplish your goals faster, like an FHA loan. An FHA allows you to buy up to 4 units with only 3.5% down. And they also offer streamlined refinances, so you can refinance in 6 to 7 months without an appraisal. So do some research about what programs you think may interest you. That way, when you go to talk to a lender, you'll actually have a good idea as far as what your needs may be and how they can help you accomplish those goals. My last tip number 4, if you're going to buy this year, make sure you have some kind of strategy in place. So whether this is you're buying a home that you're going to be in for some time, or you are buying a home because in a year you're going to want to make it an investment property, have some kind of plan in motion. Because if there's anything that I can forecast about this year, it's that it's going to be a bit unpredictable. I don't know where values are going to end up. We don't know where interest rates are going to end up. We all have our best guesses, and you have people who are experts who are even baffled by this market. So I think if you are going into this year, you need to have some kind of long-term strategy when it comes to the property that you're buying. whether it's you're going to live in it for 3 to 5 years or you're going to live in it for 1 year and then keep the property as a rental. I think you need to anticipate whatever property you buy this year that you would maybe have for at least a few years. If you're looking at your next purchase as a very short-term purchase and you know you're going to want to sell it quick, just realize that your margins may be very thin when you go to sell it because, again, no one knows where values are going to end up. If you are someone who is forced to sell, you don't know if you're going to have to give up some of the money that you would have gotten as proceeds to help someone pay for interest rate buy downs or to pay for closing costs. Because right now the market is such a place that homes are not selling as quickly as they used to. So sellers are having to compromise. They're having to give money towards closing costs, or they're giving money towards rate buy downs, or they're helping with, upgrades, or they're doing whatever they can to sell a property, which means that their proceeds are now shrinking a bit. So if you are in a position where you want to buy, I just say be very cautious and see this as a 3 to 5 year investment. Because again, no one knows what's going to happen with the market. There's no telling where demand is going to be for the rest of this year or even going into next year. I would say just anticipate having the property for longer than, say, like a lease where you sign for 12 months and then afterwards you're done. This is a lot different, and I think that the market is going to pick up, but there's just no telling when that's going to happen. So again, be conservative, estimate some time spent with this property. But that is it for me. I hope you guys enjoyed this video. If you did, please make sure to give it a big thumbs up and subscribe if you haven't already. I'm going to be posting videos twice a week, so make sure to subscribe and click the little notification bell if you would like to be alerted every time that I upload. And I hope you guys have a great day. Bye.